The market broke to a new high with very limited follow through again, and sellers pulled the rug out from under the buyers in a pretty big way to close out the end of the week. So, what are the implications of that move? And is this balance that we've been in since October a bit of a red flag? My name is Lamont. I've been a full-time trader for 8 years now, part of the Chart Guys team for more than half of that. We're ahead of our futures room and our swing report. In this video, we'll go over all of that and more. So let's get into it. Okay. So this has kind of been the MO of the market. Market really hasn't had a lot of conviction ever since we broke out of this over this July 2024 high and began this kind of lengthy weekly sideways trade. If you just kind of zoom out to the weekly time frame here and kill all these drawings, then you can see that we've just broke out over this 2024 high, and then we really just traded sideways for the most part. And so when you are trading sideways, responsive trade is the most appropriate type of trade. So now that we have found acceptance back under 607.54, which is the point of control of this prior all-time high structure, the odds of us seeing further balance within this local range is obviously quite good. The seller objective should be to get to the lows of this range now. And additionally, holding under this structure also increases the potential that we're just looking at further weekly balance, right? So we have signposts that are along the way to let us know whether or not we're in for further weekly balance, or whether or not we can just continue to stay within this local range. And just like we've been using for forever now, or it feels like forever, this guy is our key reference again, right? Just like throughout all of this, if the sellers couldn't find acceptance below 598.16, then we were pretty confident these buyers were positioned well for a go at new highs, and they did break to new highs after holding a back test of this key level, but again, couldn't really put anything together. So it's right back to eyeing this guy again. And is all of this weekly balance a bit of a red flag? I would say no. Like, bigger picture, as long as you're holding over this July 2024 high, then we're still constructive, right? On the weekly time frame, on the monthly time frame, we've broken out over this major resistance level, and so this is all really just consolidating this move as of right now. Is it, you got to call it exactly for what it is, right? Like, why does this kind of price action occur? It's typically because you have late location buyers, right? So what is the implication of that? The implication of that is, well, if there's late location buyers and higher prices are not accepting, or rather higher prices are not attracting new buyers, then what needs to happen is the late location buyers need to get shaken out first, right? So, excuse me, I'm still just getting over COVID. um, so again, so anyway, what's the next signpost? Our major signpost now is going to be 598.16. If acceptance under 598.16, then we're probably looking at more balance like this. And then, of course, if we're under 582.52, then we're back to eyeing this July 2024 high. And as of right now, the July 2024 high was actually never back tested. This was a near miss over here. This was a near miss over here. The low of this was 565.17. So this was a miss by a penny. This guy over here, I don't know if you can see it actually. This guy was a miss by a penny. This guy was a miss by 10 cents. And so the sellers have actually not really they haven't at all back tested July 2025. Technically, they haven't touched down on the level. And so that is still like it's not anything to hang your head on. But the idea is, if you can't even trade through this structure sitting on top of the July 2024 high, then obviously you don't get to the July 2024 high. And I think the July 2024 high is really when, that would be a big red flag, right? That would mean that all of this weekly sideways trade that we've been in since October now becomes overhead supply. So in the short term, I think it's pretty reasonable to be looking for essentially potential lower high play, or even another pop and drop here, top fishing against all of this local overhead supply here. And you can even come out all the way to the monthly R1, give it a lot of wiggle room, and that shouldn't be that much risk, just like a percent or so. And really, we're targeting the lows of this local range first. Excuse me here. Really, we're targeting the lows of this local range first. And of course, if we find acceptance under 598.16, then a seller can be looking to play it down to here. Right? And by the time that you're all the way back down to the July 2024 high, you probably don't want to be sticking around too much longer after that. But this is a reasonable sell, looking to top fish against, again, this daily overhead supply, potentially another pop and drop, looking for just more responsive trade. This is really just responsive trade. There's actually a really good example of responsive trade. Well, there's a lot of good examples of responsive trade, even in the sectors that we cover in this video. But somebody asked about, it was UNH, right? And for, oh, it's okay, cool, sorry. Yeah. So for UNH, this one was one that we covered in the morning streams, and it was a member request. And this is a very similar concept, right? Where you have a break above, a bunch of balance, no follow through, you drill back down under it, and then you can look to top fish against the structure that was sitting at the highs of all of this balance here, and then just target the lows of it. And in this morning stream, I let our member know that, okay, well, now it's in the buy zone. Essentially, again, it's just responsive trade. You're just looking for further balance, and whenever there's been a lot of balance before, and you're looking to initiate a trade to, looking for continuation of that balance, all you want to do is just identify the key structures that are dictating all that balance. So this guy is sitting at the highs of the balance. This guy is sitting at the lows of the balance. This fellow was affirmed here, affirmed here, affirmed here, affirmed here. And then this guy was affirmed here, 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 here. So this is the kind of situation where, you can kind of already have a good idea of where you're interested in taking trade way, way ahead of time. So responsive trade is actually one of the more easier setups in my opinion. So anyway, this is a very similar concept. Break to a new high. This is the key structure. This is obviously a big old line in the sand. If we break to a new high, then obviously we're not setting a lower high. So that's why this would make sense. And then if you're, bigger picture buyer, I think it makes sense to be more cautious at this point now. Like, I'm not too confident in looking for buys over here. It is still reasonable, but I get the sense that we maybe need to shake out some more, again, some more later term buyers. And if that's going to be the case, then, you could argue that these are all also later buyers, right? Relative to, this move ever since the October 2022 low, you could argue that this is like late term buyers, right? Because at least right now, the market just seems like it's too long, right? And so if that's going to be the case, then the odds of us seeing further balance to work off some of that froth is good. If that's going to be the case, then really want to be looking for buys like down here, which, probably isn't going to set up anytime soon, probably, right? Unless things start to get really hot and heavy. But something like this, I think, becomes pretty reasonable. Just, again, just treating this as balance and looking for something like that, I think is pretty reasonable. Okay, so that's pretty much it for the SPY. For the Qs, it's going to be pretty much the same exact situation. For the SPY, not it's not as bad as the Qs. Because you had like staples, there was a flight to safety. You had healthcare, staples, I think industrials where I saw some rotation. Saw some capital inflows, I mean, whereas the rest of the market was selling off. So the NQ looks quite a bit worse, right? Because for the SPY, excuse me, for the SPY, remember, we care about this guy. For the Qs, we care about, oh, I'm sorry. I think I'm confusing myself here. Oh, excuse me. Yeah. Okay. So it's honestly same. They're very, very similar situations here. Pop and drop again, daily overhead supply. And so at this point, again, I don't really care to recycle that zone over here, right? So we had that old trade zone over here, and that was because of this big rip up, looking for the potential of a higher low to be set, and then looking for a test of the local highs. I honestly think this is okay. Like, if you drill straight down from here, then yeah, you can just recycle this guy. But I'm thinking now that you have a look above and fail, the odds of us seeing further balance like this is pretty good. So again, I would prefer to be more conservative and look like somewhere down here, play to get to here first, and then try to get to the other side of the range. That's really it. The market, SPY, QQQ, we should just expect further balance like this, right? As long as we're finding acceptance under 535.16, then we should expect there to be further balance. And if we trade through 521.74 and find acceptance under that, then yeah, the odds of us rotating back down to the lows of this much larger range are pretty good. And so that is really it. So we can set up the same exact sell over here, looking for like a potential daily lower high or another pop and drop, and it would be just like this. Something like this, and then you're looking to get over here. Okay, so again, just looking at responsive trade for QQQ and SPY, because that's what the market's doing. If the market is balancing, you do responsive trade. That's it. Yeah, that's pretty much it. Moving on to the rut here. So obviously, we don't need this guy in the short term, but I'm looking at all of this now as just one big old area of sideways here, right? And if this is all just a bunch of balance, just a bunch of sideways trade here, it is still technically constructive relative to this guy. Remember, we were watching this guy because this fella is the next major structure within this big block from July, from the 2021. This was like 2 years or so. No, I'm sorry, this was just 1 year of balance. And so holding over this guy keeps these buyers positioned well still. So you can see how the low of the day today was pretty much made right off of that point of control. And whether or not we continue to see that point of control hold is anybody's guess, right? But at this point, I do think it's reasonable now to be looking for top fishing plays even lower here now, right? So if you look for a bounce, this is now your new supply. You can just take this for now. We don't need that over here. And if you do happen to reject from this guy again, it's really just a matter of trying to come back down to this point of control first. And then I would look for the val test. Something like that. I think pretty reasonable in the short term for IWM. And that's really all that I care about, right? But primarily, I just care about this structure here, right? So as long as we're holding over this guy, let's blue rectangle over here, well, then we're still chipping away at this supply. But in order to affirm this fella as the man, you have to hold over its point of control at 217.60. So these are really the only two key levels that I care about for IWM in the short term. That's really it. Okay, so moving on here to let's see, the Dow. All right, so for the Dow here, coming into the trade zone. So if you recall, the reason why we were looking at this guy is just looking for a backtest over here. We want to cover this really high volume area over here. And again, this is all just looking like further balance. So at this point in time, I do think this is still a very reasonable area to be looking for trade, but you do want to be mindful of all of this volume here. So if you are looking for a buy, looking for a more responsive trade, you do want to keep your eyes open and look at this guy. This guy is the structure that already worked twice. So this trade zone was set up here, comes into the trade zone, gets to the target, comes back into this trade zone, surpasses the target. You can essentially just keep recycling this area. It's a rather larger version of it, but a more conservative operator, you can just stick to here because the high of the trade zone is roughly the point of control of this local demand zone. And then the middle of it is pretty much this high volume area. So I think this is still very reasonable. Again, it's the same exact thing with the SPY, the QQQ, the IWM. You can be looking for top fishing plays as well, right? Like this, looking for potential lower highs or pop and drops. And again, just looking for further balance. Like the market is not averse to this at all. In fact, that's like kind of normal, right? Like the market should spend most of its time balancing because it needs to be trading at a relatively stable price in order for there to be a lot of contracts or a lot of inventory exchanging hands consistently. So yeah, I mean, if you just look at like the SPX, for example, right, there have even been decades where it just kind of trades sideways, right? So you zoom out. Oh, this is the monthly chart here. This is like 10 years of a sideways trade, right? This was a couple years, I believe, a couple years. This was 4 years or so, right? This was 2021, like a couple years, right? So after range expansion, you should expect there to be some kind of balance, and that happens on every single time frame. So as of right now, we just saw a big old breakout from here, and so to look for a back test of the prior high is actually quite reasonable, right? So like I'm not saying that it has to get back down there. Very often it doesn't, right? Like for here, we don't touch back down that prior high, and over here you don't touch down after this prior high after you rip away from it. And I think this was also a near miss, right? So it's not that you have to go back and back test that prior high and actually touch down on it, but the seller's objective is always to negate the last breakout. So after the buyers have had their way at it for a while, it's very reasonable to expect the sellers to make an attempt as well. And we just monitor the signposts along the way to assess, how healthy that is, right? How healthy this retracement is. Okay, so that's really it for what was I doing? The Dow. Oops. The Dow. that's really it. And then moving on to the dollar here. So the dollar was another example of responsive trade. If you recall that we were looking for responsive trade as a buy down here because the market had let us know that this was the key demand zone. This was the key supply zone. So sellers looking over here were reasonable. Buyers looking over here were reasonable. And so again, we're still just backtesting this prior supply now acting as demand. And this is a really key test. Really no change to this chart, not any meaningful change. As long as we're holding over this guy, that's obviously constructive. It means we're not coming into all of this demand. And that is really it. I still think this is a pretty reasonable area to be looking for buys. Buyers continuing to look to defend this 106.335 level. And again, as long as we're finding acceptance over this guy, then they should be trying to get to the next objective, 109.365, which is just the low of all of this supply over here. Okay. That's it for the dollar. Okay, so NVDA, we got earnings next week. It's it's likely going to be pretty meaningful for earnings. I mean for the overall market because NVDA obviously is a leader in the AI space right now. Bit of a bellwether for tech and for especially for semis, of course. So what happens after earnings next week should have bigger picture implications. Yeah, honestly, these major tech names are starting to look a bit tired, right? If you just kind of scroll through all of these tech names, the Fangman T names, where? Let's do it here. I forget. So Apple just kind of in this sideways range, big old overhead supply. This is honestly probably a reasonable sell next week. Session to session setup sell. I think that's pretty reasonable. Microsoft, it's been in this huge holding pattern for so long, and it's now starting to grind this demand zone. So if we were to find acceptance under 403.70, that would be very notable. Meta finally started its sell-off. This actually looks fine still as long as you're holding over this guy. This chart looks okay. Netflix also still looks more or less okay. Google, now you have a pretty major daily overhead supply, so a bit of a red flag. And then Amazon, again, starting to come off its high. So I would not be surprised if we are looking at some more major selling, especially if NVDA earnings is bearish next week. So that being said, what do we care about for NVDA bigger picture? And I still primarily care about this guy. Like if you give me a big old gap down, right, on earnings or even just in the near term, get things really beaten up on the daily and the weekly, I'm still a buyer down here personally. So that is bigger picture what I care about primarily. In the short term, we should care about this guy again. Remember, this is the structure over here that was supportive of price here, supportive of price here, supportive of price here. You trade under it, it flips into resistance. You make that lower high, lower low, get caught up right at the point of control of this guy over here, and then rally back above it. So 128.53 remains key. I would not use this trade zone again, right? It's already dipped into it, got to the target, came to it again, got to the target. With earnings right around the corner, I would not recycle this. So let's just wait until after earnings to do anything with NVDA, and that's really it. That's all I really care about for NVDA. Bitcoin still doing a whole lot of nothing here, and we got we got to add another arrow here, yet another defense of the this guy here, right? This demand zone that's been supportive of price more than a half a dozen times now. And that's really it. There's not much else to talk about for Bitcoin, right? All this sideways trade is still super constructive as long as we're holding over this guy. That being said, I really would not be surprised at all if we were to drill down and look to backtest this structure. This structure was a ton of balance. And whenever you get a whole lot of sideways trade here and then you get a whole lot of balance, very often you will backtest that prior high. Same thing with over here, right? You get this sideways trade over here. Backtest it, sideways trade, backtest it. Would not be surprised if we were to drill through this guy and backtest this. And that would be fine. As long as we're holding over 73835.57, bigger picture, Bitcoin is still constructive. In the short term, it's very constructive as long as we're holding over 89541.25. So really no change to that. Ethereum, if we are going to see a major market top and Ethereum does not get a new all-time high, I think that's kind of a red flag, right? Because it's kind of like entering Litecoin territory, right? Where Litecoin, hasn't made a new high over this 2017 high, right? And so it just, continues to do this forever balance kind of a situation. Ethereum is potentially looking like that now, right? I mean, obviously it has made a new high over the over the 2021 high, but not by much. Oh, I'm sorry, it didn't. This was the, hang on a second here. When did Litecoin make that high? That was the October. Oh, I'm sorry, that's 2017. I'm getting confused. So obviously it did make a new break over the 2017-2018 high, but no break over this 2021 high is a bit of a red flag. Didn't follow Bitcoin. So yeah, I don't love that bigger picture, right? If this is going to be a major market top without Ethereum making a new high like Bitcoin did, that kind of puts it into question, makes you wonder, how much of its market share is being taken by things like Sol. So, which did break to a new high, didn't see much acceptance. Anyway, I still think this is reasonable. Like, if I still think this is a very reasonable location looking for trade, just because it's just responsive trades still, right? Like, what is the key structure that's creating for all this balance? It was this guy. We made an aggressive attempt over here because the hold over this guy would have been constructive, but they couldn't do that. So at this point now, it's really right back to looking for responsive trade. This is really the key structure. If not in here, then we don't come into here, and then we just continue to do more of this. This guy has already been affirmed so many times. So really no change to Ethereum either. And honestly, this is kind of a red flag as well, right? Because the goal for the buyers right now is to negate this breakdown, right? Negate this breakdown, which as of right now, they haven't even been able to touch it. So that's very weak buying as of right now, despite the fact that they are playing defense off of the point of control of this guy. So that's really it for Ethereums. And then finally for URA. So URA, again, another one where we just really want to look for further balance. Like, balance is just kind of the name of the game right now, right? There's really not, the market is really not trending as well as it had been. And so you just kind of have to know when to change gears a little bit here, right? It's no different than, I don't know, like taking a turn, right? If you're coming in on the bike, you want to do all your braking first, then lean into the turn, look through the turn, and then when you know you can get through the turn, okay, then you can come on the gas. It's kind of like that, right? We're in a period now where there's a curves, right? And you want to hit these brakes, make sure you can see through the turn before you start, putting your, wide open throttle. So anyway, that's really it. I don't really care about anything else for URA as well. I primarily care about this guy. I don't want to come back into all of this demand over here, and essentially just looking for a redo of all of this. That's really it. So like I said, market's been kind of hard, at least for me. If you've been doing better, kudos to you. That's awesome. But for me, not really that much going on. I have been working on the ads. I guess we could talk about a Tesla trade. I don't really want to get the comments. Like, it's not anything to brag about. So hopefully you can just believe me. All right. I don't want to pull up all the comments, but I made an attempt at Tesla for this ring report. And that was just because on this session here, the buyers held this 347.32, and that's the point of control of this major prior all-time high structure over here. And so I was thinking, okay, well, if we're gonna hold this point of control, these buyers should try to negate here. And so we did get a nice session to session setup where there was strength after this session. So this session here, I'll just sync it in the layout here. So after this session made the low pretty much right at that point of control, we had a strong open, so I made an attempt over here. The first attempt was just buying the open. I chopped it up over here and then stopped out the rest. And then on the pass back over the point of control, the price session's point of control, I made another attempt after stopping out, but then I threw my stop under the low of the day. On this big move up, I took another exit against, I forget, it was here. I took another exit here because the buyers had problems here already. So I figured, okay, well, these buyers, if they're gonna have problems again, potentially they'll have it here. So chopped it up again, walked my stop up to under here, and then stopped out the rest on this session. No harm, no foul was actually a small win because we got a couple chop and stops. But obviously nothing to write home about. I just talk about it because we're the chart guys. We don't try to sugarcoat it, right? Trading is not easy. It's not. We don't want to be here and only talk about when things go super well. And in fact, I guess we could talk about how another NQ situation as well, where things just didn't go that well. I think we talked about it last week. The buy from here. Let's see, the buy that was from here. So I bought the NQ on this day after the regular trading hours high back test. I got an ad on this session, out all the ads. Let's see. So this was two contracts. Yeah, I was out one over here and then added, and then I ended up taking both out at the end of the day because it was Friday. And then I was looking for to add to the original position from here, and I did it today, which obviously didn't work because we had a big selling day. But I think it's important to know essentially like to just trade your edge because you don't get to know if it's going to work, right? Like this context was pretty much the same situation as what we had over here. I was looking for affirmation the next day, right? Because what happened on this day was a hold of this key level. And so this play on this day was looking for affirmation of this day if we could continue to hold over the high of the prior session, which is the best case scenario, or over its point of control. So that's another key thing, right? You kind of just want to know when you should no longer be attempting that buy, right? Because the context today was very similar, right? Where this session held the backtest of a key level, and then we had a pretty strong open over yesterday's point of control. So I made an attempt early in the morning, stopped it out very soon, and then made another attempt here at the point of control because if these buyers are going to stay constructive and continue to affirm this bounce from yesterday, right? Remember, this bounce is what made for this low over here, right? So if these buyers are going to affirm this miss of the daily no change level, then they need to hold over the prior session's point of control. So I was willing to make that play here for the potential best case scenario if we just get another situation where buyers are just strong off of the gate and affirm yesterday, great. And I made another play here because, well, that's where the point of control is from the prior session. And then once I stop that out, okay, I'm done with this idea now, right? Because in order for my edge to shake out, I need to see the prior session be affirmed by holding over the point of control. If it can't do that, well then, then obviously that's not what I want to occur. It's not happening, so I should stop, right? Now, I will also say that this situation pointed out one of my biggest weaknesses. One of my biggest weaknesses is anchoring bias. So for me, I guess it's not technically it's anchoring bias. At least at least it's somewhat anchoring bias. Where once I have the original idea on and it's being affirmed by the market, I very often forget to look the other way. Right? This happens a lot. I used to do this. It used to be a very common mistake that I would make for when I was trading day time frame and going both directions. So I would look to play the name that was relatively strong as a buy, and then I would look to play something essentially a pairs trade, right? And if I initiated the first trade and then it's going well, I would often forget to do the paired trade, and in like martial arts or whatever, people will call that watching your work, right? Where like instead of you thinking in advance about what to do next, you're kind of just watching like what the effect of your last strike was, right? And this is like I can see this pattern of behavior in mine, and trading, kind of just always it's a very good way to bring these things to light. And so and this was honestly is because there was a lot of really good discussion in our futures thread as well. So yeah, I realized that because I was so focused on just working this new strategy, looking for an add to the original position, looking to add to the NQ, I kind of lost sight of the fact that there was actually a very easy sell on the ES, right? So I was thinking in my mind, okay, well, I'm kind of stuck in the buy, and so I can't be a seller in NQ, so let me just focus on this edge and I'll just do that. But there are other things that you can trade. And so for the ES, this was such a straightforward lower high play off of the regular trading hours low. There was probably a really nice low time frame setup as well. I wouldn't be surprised. Yeah, that's not bad at all, right? So you see this move back up. You can sell that stair step, throw your stop over the high. If you gave it no wiggle and you still got stopped out over here, you can still sell this pass back under again, throw your stop under the high. Look to chop it up at the depot if you front load it, chop it up more the diva, and then see what the market will give you, and that would have been a very good pair trade that I just completely slept on. So yeah, that's just an error of mine. So again, we're the chart guys. We don't want to sugarcoat anything. If there's good things to talk about, I'll talk about that. If there's not so good things to talk about, I'll talk about that. So because again, trading is hard. It's like it's kind of like reptiles. It's very often feast or famine, right? It's just kind of how it goes. And if you don't call it exactly for what it is, and if you're not prepared for what the experience is going to be like, then you kind of diminish your probability of success, right? Because it's always the shots that you don't see coming that knock you out. So that is it, my friends. I appreciate you guys tuning in. If you've made it this far, we appreciate like and subscribe. Costs you nothing, helps us out a lot, lets us know to keep making content like this. And otherwise, that's pretty much it. So I appreciate y'all sharing some of your time and energy with me. Hope you enjoy the rest of your session, and hope you enjoy the rest of your weekend. And I hope to see y'all next time. Farewell.